Yes.
All right, welcome. All right, we are recording. Welcome, everybody, to our Tuesday night team call. Tonight is going to be all about taxes, keeping track of tax deductions, receipts, how to utilize your business to make it work for you. There are so many benefits in having your own home-based business because you can really achieve quite a few things that you would want and utilize it through your business as long as you use it for your business. And Melissa and I will go over details with that. I'm excited to introduce you to Melissa Ball-Bender. She is a certified accountant, so she's going to be helping us and walking us through everything tonight. So thank you so much for your advice, Melissa.
Sure.
She does have a newborn.
Yes.
So if she needs to go away, we all understand that. But definitely thank you. We definitely appreciate that. So, Melissa, do you want to start it off, or do you want me to?
Why don't you start?
Okay. So I just did a quick little, let's see if I can get it. I have not shared my screen yet. Oh, I'm not going to be able to. I don't know how to do that yet. Does anyone know how to share screens? Show all windows. Oh, no, sorry. I'll have to do that later. But I just have a few little brief outlines of things that I keep track of. And so basically, when you own your own business, you want to keep track of every single thing. It does not matter how small, how large, whatever it is, you want to keep that receipt. Just to kind of give you a tiny bit of a background, I do come with some knowledge. I'm not an accountant. I do not have a degree. However, I've gone through an audit. So I had the IRS down my throat for, it was a year, going back for 3 years. And they were horrified, and horrified me, I should say, in our lives, because they saw me as a golden ticket. Basically, and I'm giving you this background for a reason, but basically my accountant, who was a very inexpensive accountant, and she used that at trial against me, overestimated my expenses and underestimated my income. Hence, we were young, we were getting tax returns, very large tax returns. We enjoyed it. We questioned it, of course, over and over and again. But at some point, you kind of stop when you see these large dollar signs coming to you, and it looked pretty correct. IRS obviously did not agree with that, and it really took a year's worth of my time, as well as $50,000, plus I had to sue her. So there is some good information that I've learned from the IRS. And basically what they're looking for is a complete full circle. So for you to have an expense, let's just say, for an example, a shaker cup, all right? $10 shaker cup. You have to be able to show how you received the money to buy this shaker cup. Who did you buy? And I may not be going correctly in my circle, so don't worry about that. But who did you buy the shaker cup from? How much did it cost? On what day did you buy it from? How did you get the money to buy that shaker cup? And what did you do with that shaker cup? So really try to get an idea. It's the whole full circle. So I know people always try to get away with a few extra things. Some of those things aren't going to be worth it if you're ever audited, and they can go back 7 years. So you really want to keep it as legit as you really possibly can. And then there's a lot of extra things that you can use, like Lauren just purchased her laptop. So for example, with the laptop, and Melissa, correct me if I'm wrong, with the laptop, if it's not strictly 100% business, you do have to depreciate it over a certain amount of time, usually about 3 to 5 years, and you have to say how much of it is used for business. Is that correct, Melissa?
That's almost correct. It kind of depends on how much you spent on it as well. There's a limit.
Okay.
It's either 500 or 1,000. There is a limit that you could just expense the whole thing, but I'd have to look at the details on that.
Right. Fantastic. And if you have an accountant, obviously work with your
Ask
accountant.
your accountant, yeah.
Yeah, that's the best way to do this. But if you are doing your own TurboTax or anything like that, look up the rules, know your rules. Owning your own business does allow you a lot of perks, like we said. We get to write off a few extra things that most people are not on our Schedule C. And so that's what you're going to be using on your tax return is your Schedule C. This is what I get back from my accountant, and I write in the numbers. I don't take my accountant all the receipts, but I have them, and I do keep them actually more than 7 years, but you only have to for 7. And on your Schedule C, it actually will walk you through quite a few things. If you ever just want to pull up a Schedule C, they will talk about advertising. So if you're ever going to pay for any form of advertising, like the events that we do, the tables, materials to help you at those events, the tablecloths, the banners, not going to have samples yet. That'll be different. But pens, as simple as it is, it all adds up. Because if you're going to spend $5 on this one item, but maybe you do that quite a few times throughout the year, that's possibly $45, $50. So it all adds up, every single dollar. Anything that is advertising. Now, the car, I'm going to kind of hit on a couple that people usually have questions with. Some of these things are going to be very, very understandable, and you're not going to question them at all, so I might skip them a little bit. Car and truck expenses are one of the big ones, right, Melissa?
Say that again?
Car and truck expenses.
That can be a big one if you do a lot of traveling, yes.
Yeah, the red flags for the IRS are going to be car and truck travel, meals, and entertainment. Those are the things, and donations. Those are the things that you don't want to mess with, because they look at that, and if it looks odd, they're going to look further. So be very careful about what you put for that. But your car and truck expenses, you basically have 2 ways to handle that. One is through your mileage, and you write down your mileage or keep track of it on that mileage tracker that you can get an app for. And keep track of your mileage every time you're doing business. You keep track of that mileage. Now, Melissa, what are the exact rules with that? I know that there are some rules, and I don't always do great with them.
It's hard to explain, but basically you keep track of your mileage, and if you're driving for a certain, like, to an event, and I will say up front too that, I mean, I have an accounting background, but I'm new at this type of business, and so I haven't seen a lot of this in my experience, but just in general, mileage is just anything you are driving for business purposes. Commuting is not included, like if you're driving to a job back and forth, but this doesn't have commuting. So it's just a strict business mileage.
Right. That's what I knew, that there was a specific rule that they don't count certain things. And really, that's the direction you want to go. You can also write off, you can go the direction of like gas and insurance and stuff like that, but it's much more tedious, and it gets frowned upon by the IRS. They don't like that as much as mileage, because mileage is concrete. Now, if you're anal, which is good for you if you are, I'm not, what they're really looking for is they want a calendar of your day. So if you write off, and again, if you keep your app, it will have all this, but they want to know, if you go to this meeting, what was that meeting for? What date did you go to that meeting? What did you do at that meeting? And then coming back. So again, always think full circle. Don't be scared. It's just different things to kind of keep in mind while you're keeping track of stuff. I'm not the best record keeper, but I keep everything. And then whenever I do my taxes, I just have a bunch of my stuff ready to go. And so far, I've been okay with that. That's really about car and truck expenses. They will ask you for your title. They're going to ask you for your insurance. They're going to ask you for any of your maintenance. And as a business owner, you can write in a percentage, but you can write in your expenses that you that are required to run your vehicle if you use your vehicle for expenses or for travel.
Can you pick up your phone right now and see if that makes a difference? Because some of us have really, I think everyone has really bad feedback, and it looks like the majority of the people that are on video are muted.
Okay.
Kathleen, are you able to mute? No.
Can you hear me better on that? You can't?
Yes, we can. So much better.
Okay. Okay, great. Yes, always please tell me that. Thank you, Lauren. All right, fantastic. Okay, good. So car and truck expenses, it is a big one because you can accumulate a lot of miles, especially if you're driving back and forth to different meetings, if you're driving back and forth to your events, conferences, and so on. I'm to kind of give you an example with my 2013. I just had that handy. I had $2,879 in expenses. and that is what I wrote off according to the amount of mileage that I had driven that year. I'll try to give you a couple examples. And again, I'm going back to 2013, so it was the beginning of Isogenics and some real estate. So it's not a large amount of expenses on this year. Parking fees and tolls, that's again, of course, on the list. That one, anytime you're going to pay to park or you have tolls, get a receipt. So whatever you do, get a receipt. Write on your receipt Isogenics. And then if it has to do with other people, if you're meeting someone or they're with you in the car or you take them out to lunch or whatever, write on the back of your receipt who was with you or just give details. For example, travel, like I said earlier, is a big one. It's a big red flag. But we do a lot of it, right? Our conferences. So what they wanted from me was not just my receipts from conferences, but they also wanted an itinerary. They wanted to know where it was being held. They wanted proof that I actually went to a conference. And so then every receipt I had, if it involved someone, meals or anything like that, whether I'm paying for it or not, but if I'm there with other associates, I write down the names of the people that I was with. Just the more information, the better. And again, not to scare you, just remember the more information, the better. Let's see, next on here, there's some different things on here. Legal and professional fees. So here's one example of something we could do that most people don't. We could actually write off our legal fees, our accountant's fees from the year before if you were doing business the year before. My accountant is very expensive, so it's nice being able to write that off. Most people don't get to do that. Office expense. That's one that a lot of people question. What is an office expense? My accountant answered it with anytime I spend money to run my business. I'll repeat that again. Anytime I spend money to run the business, it is an expense. So for an example, for those of us in Phoenix, I don't know outside of Phoenix because I did not ask this question. So ask your accountant or Melissa if you know. But I asked about, I place a lot of orders through different accounts, and I always have a $5 will call fee. Rather than a shipping, I pick it up at will call. There's always that $5 attached. Can I write that off? The response is yes. If I had to do ordinary business outside or to run my business, it is considered an expense. So I would assume, and Melissa, help jump in here, I would assume that if it's your personal order and you're having it shipped, that you cannot write off. But if you're ordering other products for other people, maybe for marketing or samples or giveaways or something like that, you can write off the whole order, including tax and shipping. Am I correct on that, Melissa?
That would be my understanding. Like, for instance, you just sent me something as a gift, and the whole thing, the pay for it and the shipping, could write it off together. Yes.
Yes. Okay, perfect. Great.
And can I jump in about the office expense?
Yeah.
Is that the one you were talking about? That's just office supplies and postage, really. That one line. Yeah.
Right. Yes. Because when you break it down, you're going to break it down to several different things. There's even childcare benefits. So if you're running a business and you have to pay, now keep in mind, if you pay someone more than $600, you have to give them a 1099.
Yep.
So if you're going to write off your child care expenses, you have to 1099 the people that you're giving that money to. So you might have to play with that with your babysitters. My babysitter was cheaper if I paid her cash, so I did not get to write her off. However, I had my assistant watch my children, and it was part of her salary. I did not care whether she was working in my office or she was taking care of the kids. I wrote it off, and that's just part of the deal. All right, good. Your house. Your house is a big question. People always question, what can I do with the house? So if you have a dedicated office, and as you can see, this is a dedicated office. IRS actually did come to my house. They looked inside my house. They walked around the entire house. They looked at my office, and they approved, yes, you have a legitimate office. You can write off this square feet, which is like 200 square feet. because I can write off that 200 square feet, I get to write that off against my mortgage. I believe the taxes, but I don't know. That I leave that up to the accountant. The utilities, when we remodel, and gray areas, Melissa, you can correct me if I'm wrong, always feel free. Gray areas are the alarm, landscaping, and stuff like that. I've questioned that in the past. I have so many things at the house that when we do stuff like that, it's to help beautify the house and to show off the business more. So they've allowed it, but just so you know, contact your accountant if you're going to talk about those kind of things.
Right. Those are kind of gray areas. I would just list them out, and your accountant can decide whether they're important for your business or not.
Right. House cleaning, alarm, landscaping is usually what I did. And again, it's a percentage. It's my 200 square feet, a percentage of that. My husband is always like, don't worry about that, because it actually comes out to such a small amount. It's like 2%. It's nothing to really worry about and spend that much time trying to figure out and think that I'm going to receive all kinds of deductions from that. The house is relatively small, but you need to be very careful if you're going to call yourself a home office business that you do not have a bed in the office. It is a bedroom or a walled room, and that you measure it out. Because if they ever do come, they will take a look at that. Let's see, meals and entertainment. That's always fun. We do get to write stuff off, and that's the fantastic thing about our business, because we entertain people. We're wooing and schmoozing people to be a part of the team or a part of what we do. So the IRS gives us a break for different reasons. However, no matter what you do, whether it's a team dinner or your own dinner, you get 50%. So whenever you're having if you're in between events, and like Melissa and Beth go back and forth to each other's houses when they're doing their events on Saturdays, if they stop and eat along the way, you get to write that off. That's a business expense. If you're out and about and you're doing business and you didn't bring food, you get to write that off. Again, keep your receipt, write information on it, and it's 50%. So always know that. So do keep that in mind when you're buying team dinners and stuff. Just know 50. Anything with that, because that's a big one, Melissa.
Yes.
Okay. It is a big one.
All right.
Okay, cool.
Yep.
Supplies. That's a big part of what we do. And possibly a little tricky to keep track of your supplies, because we do give away samples. Raise your hand if you give away samples. If you're giving away freebies and gifts and samples and stuff like that, whether it's at your events, at a table, a booth, to friends, whatever it is, you want to keep track of that, because that is an expense 100%. So if you can, order it all on one order and then write that off. I highly recommend you do that, and then put it in a separate area so that you know that's my stash that I can give away from. And then it kind of keeps you on a budget too. And budgets are necessary in this business. You want to know how much you're spending and how much you're giving away, and whatever you do, be profitable, or see the future in it. So if you can do that, that's great. That might be a little bit of a gray area. We cannot write off what we eat. Although, Melissa, since it is food and it is meals entertainment, do we get the 50% or no, not at all?
Sorry, what?
So the food that we buy, that we eat.
Oh, it's not deductible. No, that food is not.
Okay.
No.
Okay.
When you talk about like the giveaways and stuff, do you count that as supplies or like a product expense? What do you consider it?
So yeah, great question. Thank you. We're kind of getting at a point where we can ask questions. What I do personally, when I give away product, I consider it samples or a gift. And I do separate them on my receipts so that I know what the difference is. So if I'm ever audited, I can say, I gave that away. I gave that to Melissa for entering a contest. And I write that on my receipt. Contest, January contest, whatever. If it's a sample, I just write samples. I'm not real specific about that. There are a decent amount of them. And I put it under advertising. Now,
Okay.
if it's a gift, and that was a part of my office expense to run the business. And so you guys will have to kind of figure this out. on your own stuff of what you do. Was that imperative? Was that needed? Was that something to help me run my business and to help me grow my business? Then it becomes office expense. If it was a sample or a giveaway or something like that, then it's definitely advertising.
Okay.
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 Great. Education. You definitely want to bring your education into play. And anything you do at convention, that whole thing is 100% a write-off. So again, another perk. We go to Vegas, we hang out. You're going to write all of that out. You're going to write all of that off, except for, of course, 50% of your food. Now, if you, here's a good one. This got me in trouble. Let's say you go home and you visit your family in a different place. For me, it was Iowa, and I would travel back and forth. I always made sure I did business while I was there so I could do a write-off. You cannot. If you're going there for any other reason other than business, you cannot write off anything other than what was an actual business expense. So you cannot write off the car or the plane ticket or anything like that. Now, if you spent money while you were there on your business, absolutely. And that is an area that they really look at. But I highly recommend that. And I actually need to speak to many of you about traveling to where you're at and helping you guys grow your business. And when we do that, if I'm going to come in specifically, as Beth's ears picked up, if we go into Florida and we go in and we do a couple meetings all weekend long, I'm specifically there to help you guys in Florida. I'm going to write that thing off 100%. But while I'm there, I get to hang out with you and we have some fun and we get to do all of that. So you do get to have a lot of benefits from traveling, but just know the difference if it's really personal and you added business, or is it business and you had some fun in between. So your car, your travel, your plane ticket, if it is business, you get to write all of that off, which makes it really great to go and visit people. Let's see, what else is on here? Telephone. Here's a big one. How many of you are using your telephone as the main part of your business? Is it mainly business? Wave your hands. A lot of you are muted, right? Okay. That you can write in there what percentage is business and what percentage is personal. Or if it really is like 95% business, which the way I explained it to the IRS is anyone and everyone I come in contact with, I'm going to try and make business somehow. So I usually take like 90 to 95% off of my bill. I do 100% on my phone, and I also do my internet. Because again, how much are we spending on our internet, and how much of our internet and our Wi-Fi is used for our business? So again, think of everything you're doing that helps you create business. You either write it off 100% or a percentage. Okay, and we're going to be ending in a few minutes. So let's go ahead and open it up. Let's see if Melissa has some other advice or what kind of questions you guys have. So go ahead and unmute yourselves, and let's go back. Usually people do. Melissa, anything that you want to cover?
I'll just give it a simple thing that I've done over this past year is, and instead of like buying like for samples and things like that, I didn't buy like a whole box of bars or something that I was able to set aside, but I kept track of what I gave away at different parties, and I just kept track of it and listed it. And then at the end of the year, I added it up, and then I figured out how many like bars were in a box and that type of thing. And that way I was able to figure out how much was actually giveaways, because it was difficult for me to just say, yes, this whole box of bars is going to be given away. So just one other way to do it is just to write down what you've given away at different parties or different events. If you do it on a smaller scale, like I've probably done. So. Yeah,
and it can be hard to distinguish what you gave away throughout the year. So just try to write on it immediately. I'll see if I have some receipts handy. I just try to write on my receipts right away, because if I don't do it immediately, who's going to remember later?
Right.
So this is a typical store receipt, Isogenics, and then I don't know, where was I? Oh, this was at convention. So I wrote down the names of the people I was with. And then as far as like an Isogenics receipt, no, let's see. See, I'm bad at filing. That's why I hire people. And if you know your strengths. And so when you get to a point where you are not able to do everything yourself, hire people and hire them for the strengths that you don't have. So I always hire people who are great at filing and keeping track and organizing. And I write that off. That's employee compensation. That someone got to help me with everything I'm doing, and I did get to write that off. I give them a 1099. I don't have anything handy, but mine is as simple as circles and highlights. They don't care as long as you can walk into the IRS and prove this is a sample. I gave it away to this person on this date or for this reason. You don't need a ton of detail, but something to back you up. The more notes you have, the more they're going to believe you on anything you say. So just make notes. Real easy. All right, great. Melissa, anything from you?
Nothing else. Just any questions that people might have.
Stephanie,
Okay, great. Yes.
I have a question with the food when you're talking about when it's your personal food, but I think I remember this being a conversation once before. The fact that we have to purchase 100 BBs to run our business, regardless of whether we're using it as food, we have to have that 100 BBs in order for a business, for us to stay active. Is that 100 BBs a write-off? Because some people have said yes, and I mean, not above it. Like say you're buying 100.
Right.
But I've heard that if
You know,
I'd say that's a gray area.
I'm going to agree with that. I think that is a gray area. Ask your accountant, and if anyone wants to ask their accountant and come back and let's compare notes on what your accountants say on that. Because again, we have to have that 100 BV in order to run this as a business. So very good question.
You are completely inactive if you don't have 100 BVs. I mean, you have to buy it.
Right. And you want to make money. So it's not a business. Right. And the IRS does want to see you profit. Accountants and other people may tell you otherwise. My accountant, for instance, and I've heard it before, so I'm not just going with her, but they like to show you at a zero profit so that you don't have to pay much in taxes. That's really only for 3 years. The IRS wants to see you profit after 3 years. Up until then, it's considered a hobby, so your expenses have to look like it's a hobby. Once your profit looks like actually a business, your expenses can look like a business. So if your accountant does tell you, we really want to zero you out as much as possible so that you don't have to pay any taxes, that's where I would be very cautious and start asking some more questions on who you're working with.
And besides,
All right, great. Other questions?
you're supposed to be a product of the product as well.
Absolutely. Absolutely. So you do have to show that you use the product and that you're a part of it. In every way, 100%. Be a product of the product. If this is a business, run it like a business, 100%.
And you can show a product, you can show a profit in the first year. You just have to show 3 out of 5. Any 3 out of 5.
Perfect. Great. Yeah, because businesses do go up and down. Very good point. Thank you, Kathy. Very great. Other things that are going on in your mind. This is a big area, so any questions you have, please definitely put them out there. Our time is going to end pretty soon.
I have a question for the accountant that's on the phone. Now, my accountant told me that Melissa. Now, my accountant told me that I can hire someone and pay them on a 1099. Well, I hired 2 interns, and I actually paid them. I had a choice whether to pay them or not, but they were high school students going into college, so I paid them anyways. And I told them I was going to pay them on a 1099. Well, the girl, supposedly her dad was an accountant and told me that I was not to pay her on a 1099 and that if I was not going to treat her as an employee and take out taxes, then he was going to report me to the IRS. And I told him that I've been in business for 20 some years and I've always done it with a 1099. So I had to let her go.
Yeah.
Tell him to report you.
Huh?
Just tell him to report you.
Yeah. It's up to you how you want to do that. And if she wants to, if you tell her up front, that's how you're going to pay her, then that's fine. It's nothing that you were hiding or anything. There's nothing wrong with paying her that way.
Okay. Well, I just wanted to make sure.
Know.
He's like, I don't know what you guys do in Baltimore, but that's not what we do out here.
Well, that is what we do out here, by the way. But but when you are going to pay as an employee, if they're working a certain amount, you do have to kick in the benefits and health benefits and all of that kind of stuff. You also do need to pay sales tax. So you need to talk to your, let's not call them employees. Let's go your independents.
Right, because she only worked maybe like, I'm guessing maybe 8 hours a week, if that. So. Right.
So with your independents, if you're not going to take tax out for them and send that into the IRS, if they're not working for you pretty regularly and a decent amount of hours, you need to express that to your independent person that I'm not taking taxes out for you. I'm going to do a 1099, and you will be responsible for that. So this is your salary. This is what I'm paying you, but know that you're responsible for your taxes. But they're also independent. So they then get to do a 1099 or a Schedule C as well to write off their mileage and any food or any expenses. So it kind of works both ways. But you need to be very clear. If you are going to hire someone, be extremely clear how you're working that program.
Yeah, and I've always had been. So
good. That brought up another thing. When you guys really start bringing in money, you want to pay quarterly. Now, up for a while, depending on your profit, you don't have to pay quarterly. It is recommended, and your accountant is going to recommend a certain amount based on your income. A lot of times, what I have found throughout the years is if Brad, my husband, put in a little bit more on his W-2, then it really kind of took care of both of us until I started bringing in a profit. And when I really started bringing in a profit, that wasn't enough. And then it was a big chunk at the end of the year, and that can get you in trouble both financially as well as the IRS does not like that. So if you can pay quarterly, whatever that is, even if it's not the exact amount that you are supposed to be paying, by showing the IRS that you're running it like a business and you're sending in money every quarter, they appreciate that so much more. So whatever you can send in, do send that in, and there are specific deadlines to that. And also, just so you know, if you ever do extensions, when you do an extension, you have to, there's a small penalty fee of if you did not send in the right amount when you do it for the extended deadline, you have to pay that amount. So either don't do an extension or know that you're going to have that penalty and be okay with that. But of course, that comes onto your taxes the next year around as well. Anyone head spinning?
That's good advice, Stephanie. I would say if you can have most of the taxes withheld on the W-2, like through your husband, that's the best way to do it. Or pay in quarterly if you start making a real profit, then do that. Yes. And yes, all the money is due April 15th.